Silver had a great day. Does this mean that the summer doldrums are over with silver's price? I wouldn't rule it out yet. However, there are some encouraging signs, but there are also some signs of distress in the economy. And we'll talk about it and so much more as we explore. I like to bring you the latest news regarding silver's price and other factors and analysis with regards to the precious metal as well as gold and others. And we're now talking about silver making a pretty big move in a positive direction today on a Friday. This is the second time in about 6 weeks that we have seen silver break out on Friday. Usually it gets smacked down pretty hard. But there is too much against it with regards to the natural market forces that are at play based off of a mixed employment report that we're getting today. So let me report on what's happening in the precious metal sector. Green all the way across the board, from gold all the way down to rhodium. The prices are moving upward. And with silver performed the best out of all of them, save for platinum. Platinum actually spiked up 2.81% moments before the markets close, well above $1,000 now for platinum. But gold and silver are the metals that we focus on the most. Gold rose 1.3% today, up $30.70, just about $12 or $11 shy of $2,400. We got about $70 to go until gold reaches its nominal all-time high yet again. Many feel that gold, it's just a matter of time before it breaks another record in nominal dollars. So gold is trading up very stably in a positive direction. Silver's catching up a little bit, though, with the last couple of days here. It's up 2.27%. It was up well over 3% earlier in the day with a high of $31.52. But it is now trading up 69 cents to $31.15, comfortably above, but not too far ahead of that $31 mark, which is the number that I set as to where it would trade in the range of for this summer. So it has now beat that for this one day, but it does not necessarily mean that the summer slump is over yet. I'll get into that in a moment. We are now seeing the gold and silver ratio narrow below 77 to 1. So Reuters is reporting what's going on here with the jobs numbers. Gold prices have extended gains to their highest level in over a month following key U.S. jobs data that showed the labor market was softening, lifting expectations around a Federal Reserve interest rate cut in September. And this is because, well, we're seeing gold react and silver react even stronger, in spite of what's happening with some of the other commodities now, because copper and nickel and other commodities are actually down a bit here, which is kind of amazing. The cryptos are also down slightly, but that's what we're looking at here. Slightly depressed other base metals, but silver is reacting in the way that many silver stackers think it should, outperforming gold on a day, narrowing that gold to silver ratio. When we're seeing gold trade at 1 month highs and silver trade now pushing up above 30, well above 32% for the year, that's pretty good news. Gold trading at 1 month highs as lower payroll revisions and yet another uptick in unemployment rate helps cement a September rate cut, said Tai Wong, a New York-based independent metals trader. Bulls are eyeing a return to 2,450 all-time highs if the Fed starts openly hinting at a September rate cut. So that's what we need to look out for, is to see if there's any kind of inclination by the Federal Reserve that they're going to lower rates. Data showed U.S. non-farm payrolls grew by 206,000 jobs in June, slightly higher than 190,000 new jobs estimated by economists polled by Reuters. That is what they're looking at here to bolster on the political landscape. And Biden is already touting this and ignoring the uptick in the unemployment rate, but celebrating, 16,000 more jobs than expected. And of course, we know where these jobs come from. It comes from people having to work two, sometimes three jobs, government jobs, and even more importantly, jobs that illegals are getting. Illegal immigrants getting these jobs coming in, and that's adding to it. That's jobs that are taken away from those who are coming to this country legally and American citizens. It's unfortunate, but that is the reality of the situation we are finding ourselves in. Estimated job growth for May was revised down. And this is what they do. This is what the chefs at the Cook the Books Club do. When nobody's paying attention, we see a revision down to 218,000 new jobs from 272,000. That's a massive cut. Biden's not going to talk about that on the campaign trail for as long as he's going to remain the nominee, which, mark my words, will not be terribly long. It's just a matter of time before either Kamala gets it or, more than likely, they're going to try to push her out and at the convention nominate somebody else. And probably their golden ticket is going to be Michelle Obama. Why is this important for precious metal prices? Well, because it's uncertainty. And already we're starting to see uncertainty and a move more towards accepting a Kamala Harris presidential candidacy and another pick for another vice president candidate nominee. We'll see how this plays out. But uncertainty in a domestic political situation that we've not seen in many, many years. And this is going to cause some uncertainty, and likely it's going to trickle down to the precious metals markets as well. So we'll see. April's job growth was revised downwards as well to 108,000 new jobs from the previous 165,000. Again, they're not talking about that. The unemployment rate rose to 4.1%, slightly higher than the estimated 4%. Following the data, U.S. interest rate futures prices reflected continued market confidence in a September rate cut, with the implied probability remaining at about 72%. Traders are also pricing in a rising chance of a second rate cut in December. Lower rates reduce the opportunity cost of holding non-yielding gold. The dollar slipped to a 3-week low against its rivals after the jobs data, making gold less expensive for other currency holders, while yield on the benchmark 10-year Treasury note crept lower. So there it is, and it's remarkable to see an uptick in silver's price, especially far outperforming gold on the day, and that could mean that we might be sort of at an end or near the end of the summer doldrums. There's a lot of uncertainty that could happen through the summer. It is an election year, so I don't rule out the possibility of the summer doldrums, the summer slump, expiring. But do not necessarily rule it out yet. In other words, we could still see the summer doldrums with us as some of this stuff gets baked in, and the excitability of the psychology of the markets, well, starts to wear out. You know, the hangover, and then we see silver kind of come right back down to maybe at around 30 or maybe even a little bit below. Remember, $30 is a very, very powerful resistance point. And no matter what your feelings are, whether it be natural market forces at play, the Federal Reserve itself, or other factors, the big banks manipulating the dollar, and that's really what it's about. It's the manipulation of the dollar. The Fed is the biggest manipulator of all, the biggest suppressor of silver and gold, and so that is what they want, is a strong dollar. And so with that being said, well, that means that we could see silver push back down below $30 an ounce. And I know that sounds crazy to talk about right now, as we've seen it consistently up for a couple of days in a row now, above 30. Now it's above 31. But this is a pretty dramatic move in the last couple of days. And what happens when there's dramatic moves? It's an overreaction. So we might see another consolidating period, and that could lead us to the rest of the summer being played out as being, sort of this slump period. But a slump period for silver being somewhere below 31 and above $27.50 is still a good thing to consider, where silver has been before 2024, before March of this year. In reality, you think about it, before March, from March until now, we've seen a bull run on silver that is unmistakable, folks. It is something to be happy about. It is something to celebrate. Above a 30% increase since then by the most conservative estimates. But that is remarkable. Silver is doing its thing. It is reacting as a precious metal that will preserve your wealth in such a short amount of time. We've not seen that in a long time. This is an excitable time in that regard, even though we're not celebrating kind of the chiseling away at our economy. Now, again, I'm not saying that the economy is completely crashing right now, but there are cracks, and the Fed knows it. And really, all the experts know that the economy is fragile, and it really would not take a whole lot. One or two things, more bank failures. We've not heard about bank failures in a while, but there's something to keep in the back of your head because history does often repeat, and if it doesn't, well, it rhymes. What do we see during the financial crisis of 2007, 2008? A slew of bank failures, and then a long 7-month pause before we saw others. We've seen similarities here in this situation as well, too, and people kind of downplay those bank failures, but the more of them that happen, it cannot be ignored. And with what's going on right now with, again, a semblance of quantitative easing that we're starting to see now, it's well documented that the tightening cycle is over. And even though they're not printing massive amounts of money, they are printing more. And it's going to be one of those things that they're going to be doing it. And why does the Fed do that? They do it for political reasons. I know. I normally would not have said that in the past, but it is so blatantly obvious to everyone what's going on. The chefs at the Cook the Books Club are in full effect. They're in the front lines. They're doing their work right in front of everybody, like a Japanese restaurant where they chop everything up and cook it right there in front of you. They're cooking the books right for all of us to see. And even Reuters is reporting this revision down of the last 2 months dramatically. Think about it. Joe Biden is celebrating 16,000 more jobs than what was expected for June. All the while not mentioning that in May it was revised down to 218,000 from 272,000. There goes all of your gains, folks. So look beyond the data and beyond the talking points to see what's really going on out there. So if you're holding silver, you should be happy. Hang on to it at the very least. And time your buys, practice dollar cost averaging, you're going to be fine. So there's your market report for today. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. And I would like to extend a multitude of gratitude to you all for taking the time to watch. And yep, you guessed it, I'm going to encourage you to please rate, share, comment, and subscribe.